Yep, we are recording. So everyone, welcome to another weekly recap. This is Trader Travis. My partner and Prophet Peter is on the line. We're going to cover our thoughts on the market. Actually, I don't have many thoughts on the market today. We're just going to kind of cover philosophically some thoughts on trading. Everything we're sharing, of course, is for educational, informational purposes only. Don't use what we say as investment advice. We're just sharing what we do, how we trade in the market, how we generate monthly income. So this week, what I'm going to do is give the floor to Peter first, and then I'm going to be back. Well, first, before I give the floor to Peter, I said each week I talk about something interesting and try to be more entertaining. Right. Let's see. The one I was going to talk about was my mental illness in my family, but I'm going to switch it up. Maybe that'll tease you. Maybe we'll tackle that for next week. I just came from Starbucks. Peter texted me. I was like, oh, I'm at Starbucks propping up the stock price with my wife, so we can benefit. So if you're wondering why Starbucks had a nice run up in profit lately, I have to take credit for that. We've been going there more. And today, I'm a sucker for free stuff. They're like, hey, you want a free drink? I'm like, yeah, like free drink. I was in line to pay for a drink. What do you think I'm going to say? No, right? So I drink it. I'm like, oh, this is pretty good. And I walk up to the guy, didn't even ask what the drink was. He just said, do you want a free drink? I'm like, yeah, I grabbed the drink in it, right? Then finally, I'm like, hey, what is this? He was like, oh, it's a flat white something. He's like, all I remember was whole milk. And he said something else, but it was like wonk, 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 because my brain was still stuck on whole milk. Why? Because this guy is allergic to whole milk. So I'm like, oh, crap. I'm like, we're going to be doing our recap. I'm going to have bubble guts. I'm going to be running off to the bathroom while Peter's talking. So, yeah, this is an admin note. If Peter's talking and I jet off, it's because I'm running to the bathroom. So, yeah, that's what I get for being a sucker for a free drink.
There's no such thing as a free lunch.
Yeah, exactly. Yeah. So I am going to make Peter the presenter now.
Okay, thanks, Travis. Okay, so I am going to cover, I don't have a ton here to cover as usual. I don't think I have a ton to cover lately, but so one of the things I do want to point out is my AT&T trade. So I talked about this, I think last week or the week before. It was in the money. I had a covered call. That's renting my shares out, right? So I'm renting out my shares, and I didn't technically want to be assigned because I wanted the dividend, right? But things come up, and I kind of wanted. This is a testament to the program that Travis has taught me. When I formulated my covered calls, because I placed these trades a long time ago, these things went over a 30, 60, 90, 120 day period, and when I formulated them based on what Travis taught us, it was a win-win scenario no matter what. Well, the worst case scenario happened for me where I wasn't able to manage my covered call that was coming close to expiration. And one of the things that will tend to happen is if your covered call is in the money right before the ex-dividend date, they're going to exercise you and take those shares because they want the dividend. But the golden part about all this, at first I was like, oh, I'm going to lose out on the dividend, but I never did. I don't lose out on the dividend because the money I made from the covered call to, sorry.
No, if you need to answer it, we can pause recording and slice it back in.
Sorry. So the money I made on the covered call, the money I'm going to make on my subsequent cash secured puts because I want to get back my shares, we were just, Travis and I were talking about this, it's all accounted for the dividend I would have made had I still owned the shares, right? So I lose out on a dividend payment that's going to happen. The ex-dividend date was today. So I lose out on a dividend payment, but based on how I'm going to reset everything and the original money I made off my covered calls, it's actually more than made up for it. So just a testament to the program that, okay, the worst case scenario happened, I lost. You can see it right here. It had 10 days to go, and they're like, nah, we'll take those from you. The best part was, my cost basis was technically $31 when I bought these shares. I originally bought them at 32, but I bought them using their cash secured put strategy. And based on how that cash secured put strategy went when I was finally exercised, my cost basis was around 31, I think a little bit less than that. But anyway, you can, as a matter of fact, you can kind of see I bought some at 33, but look at my cost basis at 32.50 because of all the credits they see going into it. So I'm going to probably be assigned on this $34 put, this cash secured put here, but that's okay. I was good for it because you can see my protection here is at $35. So I have enough protection for 2,000 shares. So I'm 500 behind it. And Travis and I were talking about it. What I'll be doing is I'll be selling a 5 cash secured puts for, they have 38 days. That'll bring in the revenue I would have gotten in if I own the shares for the dividend, and then I'll probably get assigned. If I do get assigned, I'll own the shares again. I'll be right back to where I was at. So long story short, that all worked out for me. Worst case scenario happened and it still worked out. I still made money, so awesome. You can't see it on here, but my Facebook, I had a Facebook cash or vertical credit spread that ended up expiring out of the money, and it never triggered my good till canceled order of 80%. I try to exit those at 80%. I'm not sure why it didn't do it, but as I always say, you can't always count on those GTCs. You got to manage the account well. By the time I got to it, my Facebook was at like a 96% return on the credit. I tried to exit out. It just never executed. It ended up expiring worthless. So I kept all of it, which was great. I can't remember what that total amount, but it was a nice paycheck. I have my Walmart trade. It's at 60% right now, so almost 61%. So give it another 19%, and I will be exiting out of that for hopefully I'll be exiting. We don't use the Hope cocktail, but if all works out, right now it's working out. You know, it's out of the money for me. It's still got a lot of time left, 38 days, but it would be cool if Walmart just kind of sat where it's at. You'd see that number start getting higher and higher, and I could exit it. If I can exit it when there's a lot of time left, those are awesome bonuses when you can exit with your 80% with a lot of time left. So, and then that's it. Next week, I'll probably start getting into some more spreads on SPY. I do have, my portfolio of stocks. I'll, in next week's recap, I can show you what I'm focusing on there. And that's pretty much it, Travis. That's all I have.
Oh man, I was like, talk longer. I was going to calculate something I learned in the class the other week. This would be a lesson for everybody. We kind of talked about it before we started recording, where we talked about older people or people who don't need to grow their portfolios in like blue chip stocks and things like that. And is because I don't want to share my screen yet. It's because those stocks aren't. No, it's fine. It's good while I'm talking. I'm going to be talking and multitasking everybody. The blue chip stocks aren't as hit when the market corrects, so they don't fall as far. And I'll give you two names: MasterCard and Visa. Look at October 2018, December 2018. Look what happened to MasterCard, Visa versus Square. Right, MasterCard and Visa, they pay dividends, I believe. Or just forget those two names. Look at stocks that pay a dividend, see what happened during corrections of October, December. Then look at Square and PayPal or Netflix. Look at what happened to those stocks during a market correction. The stocks that pay dividends aren't hit as much. Why? That's what I want to show you here. Let me show you screen monitor 2. If you're wondering why, the summary there, let me know when you can see my screen with Yahoo up, Peter.
Yep.
Okay. So if you're wondering, I was telling Peter, Peter's like, I don't think I got the dividend. I was like, no, they called your shares away the day before the ex-dividend date because they want the dividend. And if you're wondering why, here's institutional owners of AT&T. So I did the Bank of York Mellon. So I took the quarterly, they pay dividends quarterly, I assume?
Yeah.
I did it like quarterly. So you take the quarterly dividend, multiply by how many shares they own. So just Bank of New York Mellon, this is how much they own. So this is 33 million. So I think that's 33 million, right? I'm not used to seeing those huge numbers. So yeah, that's 33 million they got paid in the dividend. Do you think they want Peter shares? If they can come in real quick, they get shares from people like Peter, they collect the 31 million. From that point, they can get rid of the shares if they want. They can cash out or do whatever. So that's just the lowest shareholder. If I did the Vanguard, but the number is so big, I was like, I don't know if this is billion or million, but I think the Vanguard group, they got like $1 billion in dividend income. Do you think they want to sell that stock during a correction when they're receiving? Now, this is not a year. This is per quarter.
Quarter,
So
that's
it's like
sick.
6-7 billion per quarter in income they're bringing in by holding AT&T. Do you think they want to get rid of that? No, right? Compare that to Square. Square drops 50%. Do you think they want to get rid of that? It doesn't pay a dividend. They're just losing money. AT&T drops. They're like, no, I'm not getting rid of it. That's why I'm like, we won't talk about the other stock. We always pick one, but like, no, I'm not worried about it because if it pays a juicy dividend, oh, you know, those institutions, matter of fact, we can look it up. Do this. Go to Yahoo, look up your stock. You do want to pay attention. Look at the holders and then look at the top 10 holders here of that stock. We always pick one, see how many shares they own. I mean, if it's large like this, you don't have to really worry about the stock going to zero anytime soon because that stock pays a nice dividend too. So they're going to hold on to it for a while. I don't know why it's down, but as long as you have a large institutional holders, they're going to keep it for a while. Now, when this number starts dwindling down and they're unloading that stock, you need to worry, and that's when you need to probably sell it yourself. But that's my tip for you.
Maybe AT&T's down because I'm not the only person with covered calls that got exercised. You know, think about it. My covered call got exercised at $32.
Oh,
right?
It got exercised. Remember, it got exercised because it's ex-dividend date. So the stock drops and plus people want the dividend. Yeah, you're not the only one that got exercised. Usually they do that. If your cover call is in the money close to ex-dividend date, it usually will get exercised because somebody wants to snatch your shares away from you to get that dividend. Like they don't want you to get the dividend, they want it. So yeah, they'll snatch it from you in a heartbeat.
The good news for me is based on the program you taught us, I didn't lose out on the dividend.
Nah.
So that's the beauty of this program. So
yeah, it's not real. I mean, yeah, we could. I don't want to give too much credit to the program. It's really about blueprints or systems. Like, I mean, it doesn't matter what program you do. I mean, I'm taking a course now, and that's where I learned this whole looking at the shareholders. I'm like, oh, that makes sense. I never looked at it that way. You know, I never paid attention to the fact that Vanguard, this is just one stock. In our class I took when I flew to LA last month, we covered different stocks. Like Vanguard was bringing in, I don't know, $30 billion just in dividends each quarter throughout the different stocks they held. I'm like, gosh, that's a lot of money. That makes sense. And then why these stocks, some are dropping, some aren't. But anyway, I'm digressing here. Let me move on. I have a scrap piece of paper here. Peter makes fun of me. You won't be able to see it here. I don't use Evernote or keep stuff in my computer. This is a church piece of paper from my church. I'm in church. I get ideas. I write them down. This is probably from a couple of years ago. I have a bunch of scrap pieces of paper like this around. And what's on this that you can't see, even if you could see it, it's top secret stuff. It's proprietary. Is the one stock blueprint. And actually on this one piece of paper, there's about 5 different one stock blueprints. And I have a handout here. We covered this on our May Success Academy, our May Success Academy live call, how I've discovered that, yeah, one stock can actually provide growth, safety, diversification, and income, right? And on this one stock blueprint, I have written down DYD, double your dividend strategy, 5-strike bear call strategy, triple P strategy, that's price point profits, the Buffett strategy, profit accelerator, cash flow strategy, and 3x growth strategy, and plus insurance. So these 7 are, looking at the camera, make sure 7 ways to extract income. Well, those I just read off, Buffett strategy, 5-strike bear call. Those are 7 ways to extract income from one stock, right? You can't do that with buy and hold, only with options. And then I have plus insurance. So 7 ways to extract profit, plus you actually can insure all of that to hedge or make sure you don't lose money. So that's what I meant when I have this little cheesy title. We were laughing and I'm like, yeah, I was like, that's pretty much true. One stock can earn 12, 45% each and every year while you live the lifestyle of your dreams. Evidence of that is that's not some scammy, yeah, what do we call it?
You did it.
Yeah, that's what I'm saying. We're doing a case study. I do a case study every year. The case study, just this year alone, the count is at 99%, almost doubled in 6 months, 7 months out the year. All right. So it's just not some scammy late night infomercial title. It's true. And everything I write, I want to back up with proof, right? Because we look at this, you might be like, oh, that sounds all scammy. I'm like, yeah, it does. And I always have a hard time believing it. But that's why I demonstrate it. So anytime you see me write something, you better believe I'm going to back it up with proof. And so since I've hit my goal for the year, which was a 60% increase, I'm at 99%. I'm going to actually set up the portfolio for next year. So I'm going to pretty much stop trades for this year, and I'm going to do something neat. I don't think I haven't done publicly before, but I'm going to start placing trades for next year. And those trades won't come due to next year. So I'm going to set up. I'm going to stay ahead of the curve. The market's blessed me with above average performance. So now I'm going to take that, benefit from that. Now I'm going to set up next year's trades, and I'm going to insure those. So I really don't care what happens to the trade. But if they work out, then I'll have, by the time 2020 hits, I'll probably already be halfway towards my goal.
I was going to say, you'll be done.
Yeah, I'll be done, right? I'll be done. The 5-year retirement plan would have been accomplished in maybe about 4 years. Hopefully I can get it in about 4 years. That'd be pretty cool. It actually took me about 5 years when we did it actually, but if I can do it in about 4 years, that'd be awesome. That'd be newsworthy stuff, right? So that's what I'm gonna be doing moving forward. Lastly, this is total ego. I don't know if I'm gonna do this. I was telling Peter, I'm struggling here. I may do another case study. The first one, and I don't know if it's ego or what is it. The first case study, I didn't start with the best intentions. I had a non-believer as a student. We usually try to screen people and make sure we don't get people who join us not a good fit. And this one guy in particular just questioned everything we taught. He just it's like we're wrong. I'm like, gosh. And anyway, he was trying to tell me that you can't make money off a stock that falls in price. I'm like, yes, you can. We told him how, but he would poke holes in it. And finally, I was just like, oh, let me just buy a stock that's falling in price and show you, right? It was real money. I was like, let me just put $8,000 of my own money. I bought VXX, which is a stock, or ETN, actually not a stock, that was falling in price. And I showed them, here's how you can make money off of stocks falling. And not only that, I actually insured it. So when it was all said and done, I got my money back. And I think I cashed out of that at the beginning. When did I cash out? I can't remember. Oh, here it is. I cashed out of that at the beginning of 2019. So you can see here, this is in year two's results. But you can see here, I bought the stock for $8,000 in 2017, and almost 2 years later, I went in and exercised my insurance, and I got more. I overinsured it, so I got more back. Right? My insurance costs money, but my insurance was free because I don't like ever paying for my insurance. I find ways to get other people to pay for it. So anyway, long story short is, bought a stock, went down in price, made money off it the entire time it went down. And when I was tired with it, I was like, I'm done with you. You know, it's like an ex. I'm done with you. Go find somebody else. Let me find a new woman. So I got my money back, and I'm going to put it in a new hot chick, right? Excuse me, that's to be offensive to some ladies, but let me stop being chauvinistic here. Anyway, I'm trying to go now. I'm like, I want to do it again. I didn't start the first one off with the best intentions. It was kind of like just to shut somebody up. So I want to do it again to show people it's not a fluke. You can do this repeatable over and over again. And the one I'm considering, I don't know if I'll do it this particular one. I have a list of different ones I can do it on, but I'm thinking about doing it on SDS. It's a ultra short ETF of the S&P. So it's an inverse of the S&P. So if the S&P goes up, this goes down, and vice versa. As you can see here, during the correction of 2018, this ETF went from about $32 to a high of about 49. But the S&P had a 20% correction, and this almost doubled in price. So this is good downside protection, market crash protection, right? You could own this, devote a certain percentage of your portfolio towards this. But I'm not going to do it for that. I'm just going to show people, look, you don't have to fear stocks falling in price. There are things you can do. So I'm considering starting another case study, buying a stock that's clearly going down. It probably will continue to go down for foreseeable future. And here's how you structure it so that you don't lose money. So that's just, I don't know if I will do it, but you all have to let me know. If I get enough comments or request for that, then I will go ahead and do that. All right. So
I think you
with
should
that,
do
let
it.
me go ahead. Yeah, of
It's
course
easy
you
for me to
would.
tell you what to do. Yeah, Travis,
Right.
put more work on
Yeah,
your
put your
shoulders.
money towards that, Charles. It's your money you're risking, not mine. I just get the benefit. So yeah, and actually, I may do that because looking at my Excel, I was thinking about that. I'm like, why did I not do that before? Because I've exceeded my goal. I have extra cash laying around in the portfolio. And that's another thing. I'm like, duh, I could have been buying more shares with all this extra cash I have sitting in the portfolio. I don't know why I didn't think about doing that. It's just sitting there. So I may deploy some of that cash towards SDS. So we'll see. Anyway, that's all I have for you all this week. So I don't have a final takeaway. Do you have a final takeaway? You said
Educate
you.
yourself if you want to. Did I say I was going to do that?
Yeah, you're like, I need to start having them every week. And I was like, yeah, I probably should too. But no, I don't have a final
I
takeaway
think
this week.
the best thing I can say based on what's happened to me over the last couple of months is when you don't see that. One of the things I was telling Travis is you have to aggressively put your money into some kind of investment if you ever want to be in a position that Travis is in. So that's what I'm doing. I'm starting to really just embrace I'm no longer doing the whole, tweak any systems. It's just, look, I trust Travis's systems, and you guys see it on the weekly recaps. My performance is okay. And you know what's awesome about that? My performance is okay, and I've been lazy. I have not put in the work and the effort. I did a while ago, so I've learned a lot of stuff, but I haven't implemented a lot of it the way I can. I've left a lot of profits out in the stock market because I just have been lazy. So can you imagine being lazy and earning? Because my small account, me and Travis were talking about it, before I just put that large infusion of cash into it, it was up 44% with roughly half of that, a little bit more than half of that being my own contribution. So it's up around 18, maybe 20%, being lazy and not committed. So you guys need to go out and educate yourself. When you see an email come across, you need to get on Travis. You need to if you like our videos, give them a thumbs up, subscribe to the channel, get on Travis's email list, because when he gives you an opportunity to join one of his programs, I'm a testament to that program working. I don't worry about my financial future. I've stopped worrying about that. And believe me, I know a lot of my peers and some of my friends that are very worried about their financial future. I am not, because I know how to make money regardless. So I guess that's a long final takeaway. I apologize,
No,
but
that was
you
good,
need to
man.
educate yourself.
Yeah, best investment is an investment in yourself. So,
Yep.
so Warren Buffett said. So great point to end it on. Well, you all
Thanks.
take care. As always, was it namaste? Let's say namaste. You all take care. I know, right? Au revoir.
Ciao.
See you all later. Ciao. Adios. Bye. See you next week.